Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. The big feature of the past few weeks is that the value indices, the Dow and the Standard & Poor's TSX, are acting as if there is a recession coming, and more or less imminently, while the growth indices are acting as if their business outlook is hunky-dory. The breakout of the NASDAQ 100 over the bubble price, that's 7.4 times book, is not trivial, and it implies a move of at least one index breakpoint. The last time the NASDAQ broke out over its bubble price was in the June of 2020, and the index moved up to its HB1 price. That's a gain of 28%. Before topping out, precisely, by the way, at that key breakpoint level. The S&P did not have as strong a move at the time, which at the time I found a bit surprising. This time around, however, it's much clearer. Why not? Back then, as appears to be the case now, we are in a growth environment heavily focused on artificial intelligence, or AI for short, not a value environment. As you have seen, the volatility of the growth stocks has been stunning, but without the guidance of SVA to catch those swings, that is both down and up again, one's performance in the FANGs would not have been nearly as positive. And it does not appear to be over, not by a long shot, as we will see when I review the FANG stocks. Anyway, before we take a close look at those FANGs and what's been going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, the FANGs are, I think, broken down into what I might call three kind of groupings. The first grouping are the three of the FANGs which have just recently broken out over key breakpoints, and the leading one, of course, is Amazon, which has just broken out over its bubble price and looks very much to be emulating the NASDAQ 100 with some precision. So if we've got an upside one breakpoint for the NASDAQ, then we probably have a move to the HB1 for Amazon. Tesla, despite it being a cyclical and an auto stock, is nonetheless breaking out over its HB3. And I suppose we're going to be calling this an AI stock, auto stock and auto characteristics or not. And finally, Netflix, despite the fact that it has no connection whatsoever with AI as far as I know, is nonetheless breaking back out over its bubble price and looks to be maybe hitting higher indeed. Now, there are three of the FANGs led by NVIDIA, which basically have broken out and have already almost had a full breakpoint move, as we would have expected. And the first one, of course, is NVIDIA. But breaking out over that HB6 price, which is 33 times book value, okay, that is an all-time high. And when stocks break out over all-time highs, then they can typically go further, and maybe much further than we would expect. Second stock is Meta, which, as you know, I've been expecting the stock to move higher as the fair market value, its earnings rise higher, as Zuckerberg has promised, with a focus on earnings, and has now reached its mid-super growth price. I think that this stock has one more breakpoint to go. Finally, Microsoft has also had virtually a one breakpoint move. Now, the thing about those three stocks is What would we do right now? And that is the big question. If you hold them, I would hold them. If you don't hold them, I think I would wait to see if they can break out, as had the first three, for a further move. Now, Alphabet is it's sort of broken out over its mid-super growth price, which is 5.5 times book, but it has sort of slipped back below the waves again, just a little bit, which I find strange because of perhaps all of the FANGs. I would have thought that Alphabet certainly contains all of the elements of AI. Nonetheless, it is a little bit on the uncertain side right now. And lastly, really a non-AI stock is Apple, which continues to ride its HP6 price. That's 33 times book value. Its earnings have been going nowhere, but this is a big and powerful stock. It seems to be a must-own. So in summary, what are we seeing? The NASDAQ is clearly in an incipient bubble condition. A true bubble occurs when a stock or an index breaks out over its bubble price, which is 7.4 times its adjusted book value, and does not have fair market value support as SVA measures it. This is where we are today. Three of the FANGs are in the process of breaking out: Amazon, Tesla, and Netflix. Three of the FANGs, led by NVIDIA, Meta, and Microsoft, have already had a one breakpoint move and need to break out from here if they're to go any further. If I held these stocks, I would maintain my position. If I did not hold them, I would probably wait for a breakout to occur over their respective breakpoints. Alphabet is struggling at its mid-super growth price, 5.5 times book, which I find surprising, as I said, as I think that its artificial intelligence credentials are of the highest order. Finally, Apple just chugs along, riding its HB6 price slowly but steadily higher. It is poor value and has poor growth characteristics, but it's the biggest stock in the world. And the thinking is, you gotta have it. So it's going to ride higher with the NASDAQ index. Finally, the NASDAQ 100 and the S&P are close enough to their key SVA breakout levels so that if this move is just a feint to draw in the greedy and unawary, you will be able to bail out with only very minor losses if the NASDAQ retraces its footsteps back to and then breaks below its bubble price. For the FANG Friday viewers who are not our clients and don't have access to our index chart, watch Amazon. It is sort of your canary in the coal mine. A final word to any of our viewers who have come late to FANG Friday and may be wondering what exactly is going on with this SVA methodology. If you would like a sound introduction to the analysis and how and why it works in practice, then please visit strategicanalysis.ca today. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday.